Now, to kick off this next set of presentations, you just want to take a seat, guys. To kick off this next bank of presentations, we're going stateside, and we've got Sarah Lockyer here to talk us through the impact that private equity is having on the US restaurant market. So Sarah, thank you so much.
Thanks, Jennifer. This is working, right? Great. Really quickly, I do want to thank Jennifer and Mala in particular for a fantastic event and helping this New Yorker get to Dubai for her first time, which I had 1,000 questions, so I appreciate it so much. Really excited to be here today. The US market trends, right? We're going to talk about the state of the US restaurant industry as it is today, where private equity is fitting in, which is very different from where it fit in the last decade or so. And then take a look at some consumer trends and concepts that are really driving the future, some of which we already spoke about this morning in some of the great presentations. So I hope I can keep that momentum going. So the US economic outlook from a macro perspective is positive. It's, we've been through some pretty rough years, as I'm sure you all know. But now we're seeing some of the largest indicators that affect the restaurant industry starting to show some moderate growth, right? Some of the largest numbers that we look at are employment and jobs, as well as the disposable personal income. Clearly, you have to have disposable personal income to eat at restaurants, and so to see growth, even at a moderate basis, is obviously a positive compared to the years past when we were in a recession and climbing our way out of it. So that's always a good thing. We're also seeing some really strong restaurant industry growth in particular, right? So we're looking at US food service sales at about 782 billion US dollars. Ignore those numbers on the left. I apologize for that. I'm not sure what happened on my iPad on the flight over. But this is what we're looking at in terms of growth. We have, a 5% growth nominally and a real growth rate of about 2.1% when you factor in inflation. I do want to note, for especially those in the room, when we say U.S. food service in the United States, we're not just including restaurants. So this number is massive because it also includes food service at healthcare, schools, college and education, and those types of non-commercial food service sectors. Nonetheless, really great growth rate for the industry. So to take a look at the actual commercial restaurant units in the United States, this is what it looks like today. So we have about 640,000 restaurants in the US, and you can see that the split is about 60-40 with independents versus chains. We consider independents restaurant brands that are obviously one unit, or they could be potentially as high as 5 or 6, most of which won't be named the same, right? And then I think we're all very aware of what a chain restaurant is. But you can see that the restaurant industry is still very much split in the US, even with the huge global chains that we have. By unit count, you can take a look at the same number of restaurants, right? And we have about 62,000, or 62%, sorry, of that number are your independents. About 35% are your chains in terms of the unit count that we're seeing. What I do want to direct you to is that very small sliver, right, that 3.4%. This is a regional brand, a regional chain. They're about 11 to 50 units. So still relatively small and still relatively contained. This is where the action is right now. The action is in these smaller regional groups that are hot, they're fresh, they're exciting, and they may not any longer have this notion that they need to be a national chain, right? National chains in the US are up against some pretty large image problems. Do they serve good food at the right place? Do they keep their workers treated well? But this younger regional chain is still small enough to be able to do the things they promise their customers. They're still able to get some local sourcing, some seasonal foods for their menus. Obviously, that's not an easy task when you have thousands of restaurants across the US. So even though this is a small grouping right now, it is very active and very interesting and very innovative. And that's where we're seeing a lot of the private equity getting involved in that small sliver. So looking ahead to 2016, or I guess looking now at 2016, we're seeing that the sales predictions for the restaurant industry are ranging really low still, to be honest. It's only between 1% and 3% growth. There are projections that the US restaurant market will not really ever exceed that kind of level of growth. 1% to 3%, it's a very mature market. We're not going to see 7%, 8% probably anytime again. Now the good news is that that's still growth, and it's aided by some lower gas prices that we're seeing in the United States, as well as, again, an accelerating economy. We're seeing jobs, employment growing, so that's very helpful. Some two positives that we're seeing for 2016 is that we do see some valuations, or actually almost all valuations of restaurant concepts really remaining elevated, right? So there are incentives for restaurant chains to go out and find money. There's a lot of powder on the sidelines still, even with all of the investments that we've seen. So M&A is robust, and we're seeing private equity in particular get into concepts way earlier than they ever have. It's kind of back to that sliver, that 3% of restaurants between 11 units and 50 units. This is where private equity is zeroed in on, and I'll show you in a minute some concepts that have received investment when they're down to 2 or 3 units. So these are very unproven concepts, getting some pretty large valuations. Commodity costs in the US have stabilized significantly. There was a lot of rises, a lot of falls. It was a tough environment for quite some time. But what we're seeing now is that many commodities are decreasing in cost, and beef has finally fallen after years of really tough beef costs. That's a huge deal in the United States. We like our burgers. Well, according to the last presentation, everyone likes their burgers. But the commodity costs being stable in 2016 will be a significant help to most restaurants' P&L. Now, there are two really difficult challenges facing the restaurant industry today. And both of these, one of them, the guest traffic, has always been an issue for the last couple of years since the recession. But labor cost is starting to really rise to the top of what restaurants in the United States are concerned about. So there are minimum wage battles happening in states, in counties, and then during the presidential election, perhaps on a national basis. There's simple wage inflation because more people have jobs, more people are moving around, and that they are requiring more pay. And then there's the Affordable Care Act, which requires health care for a certain amount of employees, depending on whether they're part-time or full-time employees. Regardless, all of that put together is driving labor costs through the roof. And I'm sure for the restaurant operators in this room, obviously labor is one of your largest spend cost items anyway, so to have that rise is going to be very difficult. And I think beyond the cost, what restaurants are seeing is an attack on the US restaurant industry that is happening. There is a large group, it's called the Fight for 15, and they are fighting for a $15 minimum wage. And it is causing a media frenzy, and many of the quick service chains in particular have been targeted. So even if these minimum wage don't get passed, or let's say a state doesn't increase their minimum wage, or it doesn't go through from a federal standpoint, it almost doesn't matter because the battle is being won with the media and through perception. So restaurant companies are not going to be able to say, well, I'm paying minimum wage or I'm paying $1 above minimum wage. The ceiling is now set at that $12, that $15, and obviously that creates wage inflation through every part of the industry. If you're paying your minimum wage workers $8, you have to make sure that you're paying the right scale throughout the entire operation. This is a major source of stress right now for many, many US restaurant companies and brands. Guest traffic, finally. Guest traffic is always a challenge. In the US market in particular, it's a very saturated market. There's a lot of units. Many analysts say there are still too many restaurants in the US and that more should close. And then we're also seeing consumers move to retail food service. So the supermarket industry in the United States has gone very far past what we would expect, to go pick up your eggs and your milk and your bread, right? You're now seeing beautiful restaurants in a supermarket. It's really unbelievable what you can see. And the convenience and ease that provides a family to pick up what they need from, the drugstore, the soda, or anything they want to bring home, but then also pick up a meal that they can prepare by just heating it up at home as opposed to having to cook it, is a massive deal. And that also plays into that perception that we heard about this morning about wanting to choose what you eat, wanting to feel healthy, wanting to feel fresher. If you go to a supermarket and you pick up your food and you cook it for your family at home, that mom feels better. That mom feels better about that meal regardless of whether it actually is better, she feels better. And so this retail food service, whether it's C-stores or supermarkets, is becoming a major source of friction in the food service space that restaurants need to be and are very aware of. Uh-oh. So as a journalist, I'm going to dive into the challenges, of course. We always like to be negative. So this is a look at the comp sales and the guest traffic stats for the US restaurant market. I will say that this data is fantastic. It's from Black Box Intelligence. It's a research firm in the United States, but it does trend a little toward the casual dining market, the full service market. And that is why you will see the traffic, which is in red, below, it's negative. It's been negative for years and years and years. What we have seen is that some quick service chains are indeed reporting positive traffic. So this is weighted a little bit more toward the full service side. But you can see that while sales are positive, these are same store sales, year over year, that traffic is still negative. So restaurants are taking a lot of price. They're working on their mix. They're doing catering, which is really helping their aggregate sales. But the people coming through the door, the actual year over year traffic is still significantly challenging for the majority of the restaurant market. And I mentioned labor, right? So turnover is a huge deal. I'm sure all of you know that losing employees, especially good ones, ends up costing you money, right? You have to recruit, and then you have to train, and then you have to hopefully retain them. It's a large undertaking. So this shows that while employment, it's a little bit of a tricky graph, but while employment in the big red line is trending down, we have about 5% unemployment right now, you see the turnover increasing pretty substantially to the point where, some of it is up to 110% turnover. Even casual dining is up around 90% turnover. Those are big numbers. Now, obviously, the US restaurant industry is employing some teenagers, some others that it's their second income, so their jobs obviously always rotate. Nonetheless, this is some large numbers that has the restaurant industry and those working in it concerned about how they are going to make sure that they are recruiting and retaining the best talent to make sure their businesses are moving forward. So all that bad news, why are people interested in the restaurant industry? Private equity is actually interested almost more than ever in the United States. What we're seeing is that more of the food dollar is going to restaurants. Now, I did just talk about supermarkets, but that's a very small sliver. It's up and coming and growing, but at the end of the day, almost 50% of the food dollar to a US consumer is going to a restaurant. So it has become something that it's just part of your life. You go to a restaurant, you always are going. You're going your lunch, you're going your breakfast, you're going your dinner. There's pent-up demand, right? So the US, big recession, it's been a couple of years now, but there's still that demand for dining out. When you lose your job, when unemployment is high, the things that you are able to cut very easily to maintain your budget is going out to eat. It's one of the easiest things to get off the table. So there's that pent-up demand right now. I want to go out to eat. I want to go back to having my dinners on Friday night out with my friends. That's the kind of demand that we're seeing. And then consumer interest in food as the universe of food, is at an all-time high. And we heard that very well from the presentations this morning, that food is the new cool thing to talk about. It's what everybody posts on social. You're taking pictures of it. I used to make fun of people who took pictures of their food. I took a picture of my entire meal last night, every single course. And chefs are the new rock stars. Chefs are who people follow, who people love, who people support. So this interest in food, whether it's the finest of chefs to the limited service chains, people are interested in food more so than they ever have been. There's a lot of creativity and innovation happening in the industry. It's not just about the large chains. It's that sliver of activity that's really powerful and resonating substantially with the private equity firms today. This is a pretty bad font, but sorry about that. This is a partner from Main Post Partners. It's a private equity firm that just raised about $400 million in its first round. And he says there's a lot of creativity, innovation out there. There's new and interesting trends. And then like what we just spoke about, the overall trend toward eating out remains positive. So people are extremely positive on the restaurant industry, especially when it comes to these up-and-coming, interesting, fresh chains. And then another look from a much larger private equity firm, Sun Capital Partners, saying that multiples in this space have been on a historic high. The interest, the demand it's crazy. It really, some of the valuations should not be what they are. But, he says here, even unproven concepts, if they're on trend and they have some traction, they could be sold at multiples with a valuation that's extremely high. Now, what those multiples are, some of them are undisclosed, some of them are not. But what I find interesting is that clause right there, unproven concepts. It's amazing to me the amount of money that is being put into a concept that has 2 or 3 units in one market. No idea if that concept is going to travel to another market. No idea if that unit economic works when it gets to 10 units, 12 units. No idea if they can even source the kind of food that their customers love the second it gets beyond, the local sourcing market the distributor can carry. So it's fascinating time right now when it comes to private equity and the restaurant space in the US. What we used to see, even just 2 years ago, these huge deals. Burger King buying Tim Hortons for $11 billion. Golden Gate Capital buying Red Lobster right out of Darden for $2 billion. In 2015, what we saw is a ton of small deals. Sweetgreen, Kava Grill, Naf Naf Grill, Tava Indian, Fit Life Foods, all of these received pretty tiny investments on the grand scheme of things, and from really well-known private equity firms in the restaurant space in the US. You have your Carp Riley's, your Catterton Partners. Revolution Growth is actually a venture capitalist firm. So you're going down even a little farther, right? Now you're getting venture capital interested in the restaurant space. Tava Indian Kitchen only has 3 units. It is 3 units in one market. It's a fascinating concept, and I think the guys that started it are super smart. But, at the end of the day, it's 3 restaurants. It's 3 restaurants. And they're getting, a couple $1 million thrown at them by a private equity firm. So, why? So we talked about this a little bit again this morning. Food used to just be fuel, right? You ate food because you were hungry. You ate food because you needed to sustain. You fed your family because you had to. Well, maybe my mom didn't, but others did. But now food is so much more, right? It's self-expression. It's who you are. If I post a picture of my lunch at McDonald's, I'm one person. If I post a picture of my dinner at Nobu, I'm another person. It's part of someone's identity today. It can even be a political statement or a point of pride. I love the wings at Buffalo Wild Wings, or I love the drinks under this mixologist. It's different people are posting different things on their social media accounts, but it's still who they are. And so that's really exciting because the restaurant industry is something that the world is fully embracing as a part of their experience of being a human. Food is the most posted item on social media accounts by far. And that's a really good time to get into the restaurant industry. It's exciting. So the concepts that resonate understand that. I think this morning, and I think it was Michael's great presentation, that talked about chefs being scared of losing control, right, of their messaging because of social media and because of Yelp and reviews that they can't control. The notion of control is over. The notion of control is over. No brand can control their message anymore. No brand, not restaurants, not Nike, not Apple, because customers, people, millennials, Gen Z, anyone you want to call them, they are talking about your brand with or without your permission. Your brand is how they experience it. They don't care what you think your brand is. They care what I think my brand is. And so that's something that's really important to remember, that the way to combat that is to create your own content, to tell your own story just as loudly as the consumers are telling their story, right? And then you can get your branding in their eyes and in their hands more consistently, as opposed to either being defensive or as opposed to trying to control that message. It was a little bit of a tangent, but I thought that was really important. So the concepts that are resonating today, both with customers and with private equity firms, are those that are healthful, driven, right? We heard a lot this morning about seasonal and local, and having customers who are buying into that, vegan, vegetarian, organic, natural, all of those things. But what I want to make sure we get is that healthful doesn't always mean healthy. And that might sound a little odd, but if it's real food, people love it. Fried chicken is having a major comeback in the US. There are fried chicken concepts freaking everywhere. Brooklyn is like the home of fried chicken all of a sudden. And it's from the top chefs, to the new Louisiana KFC chicken, right? Fried chicken is not healthy. It's not healthy. But people understand it, right? It's chicken, it's fried chicken. I get the ingredients. Maybe my mom used to make it. It was something fun. It's very easily understood. And so healthful does not necessarily mean healthy. Narrowly focused menus are very successful right now in the United States, especially when it comes to what private equity is looking at. I think some of the larger firms, obviously, that are known for this are Chick-fil-A's, right? Everyone knows Chick-fil-A has the chicken sandwich on their menu. They've expanded it to grilled chicken, but nonetheless, they are known for their chicken. A very narrowly focused menu is something you can execute well, is something that people get when they go into your restaurant, and it's something you can be successful at without having to worry about being too varied. So narrowly focused menu is something that private equity is very interested in. And then there's the fast casual space, right? So limited service, casual dining, fine dining, fast casual. I don't think I've known any concept that has started in the last 2 years that hasn't called themselves fast casual, whether or not they really are fast casual. This is just how consumers want to eat today, right? They want to walk in, they want to order their own food, they want to get it quickly, but they don't want to feel like they're in an assembly line. Fast casual is pretty much where it's at right now. Concepts that resonate are also culture driven. And by that I mean actually the workforce, not the customer. All of the things we talked about with the customer and their social and how they want to be a part of something and they want to talk about your brand, your workforce is the exact same way. Your workforce actually is your customer, and your customer can be your workforce. And so this notion of being part of a brand and part of a group where it makes you feel good is something that really successful younger restaurant concepts are understanding. They're tying themselves into philanthropic efforts much more than ever in the past. They're making sure that their workers are indeed taken care of. Now that could be paid sick leave or wages, or it could be just that feeling of family. What do you need? How can I help you? This aspect of culture is not just, in your head. It's really important. It's something that even Popeyes, right? So Popeyes publicly traded chicken company. Cheryl Batchelder is the CEO. She talks about her 5 pillars of success being the franchisees being successful, the unit economics being successful, making sure your sales, making sure your costs are good, and your people. She's actually created a 5th pillar to her business focused solely on the culture and the people that she recruits and retains and keeps. And this is something that successful businesses are making sure they pay attention to. And then finally, concepts that resonate, customization. Customization is key. We heard that this morning. It's not going away. What is interesting and fun is that it can be aided by technology, right? So kiosks, tabletop ordering, casual dining happened like that. It was fascinating. Some of the largest chains signed contracts, and next thing you know, tabletops are on every table across the country. That's a huge change. Now, does that tie into the labor costs? Maybe. Will anyone admit that? No. But mobile order and mobile pay are another example of customization, right? And people want to be able to order, they want to be able to pay, they want to do everything on their own. So customization doesn't just necessarily mean the food, but the experience as well. And so this is just one tiny concept that I wanted to shout out because I think it puts together everything that we just spoke about, right? And it's called Lemonade. And there's actually 2 units here in Dubai, so I'm not sure if anyone has the time, but you can go check it out. But it's based in LA. It was founded by a chef. Chef-driven concepts, even if they're chains, are very, very powerful right now. And it has 16 locations in California. So again, it's right in that sweet spot, that dynamic sweet spot between 11 and 50 units. And what they say they serve is modern marketplace serving a colorful bounty of seasonal California comfort food. So we have seasonal, we have colorful, we have bounty. These are words that customers love to hear today. It's fast casual, of course, it's fresh, and customization is huge. And the units are beautiful. I know that we're going to talk later today or maybe tomorrow on design and how important design is to a restaurant. Design isn't just important to beautiful high-end restaurants. Design is important to millennials in general. They want to go to a place where they feel good, and design is so important to that. And these restaurants are gorgeous. It's a culture-driven workforce. And sure enough, they received an undisclosed investment from KKR about 1.5 years ago. So this is pretty much the perfect example of what we were just speaking about. So I think we have a little bit of time before we go to the next session, or are we over? We can take any questions. Just one. Jennifer said one. Uh-oh, yes. I can hear you. I can repeat it. Mm-hmm. Oh, that's a great question. So the question was, with this talk of higher wages, many restaurateurs are saying they need to pass that cost on to the consumer, and will consumers pay for that? I hate the answers like this, but it depends on the brand, right? If I'm a customer of Chipotle, over the last 6 years, I have taken a price increase every year and could care less. If I'm a customer of another brand that perhaps doesn't have the same sort of love, for their customers, I might not go again. What I don't think will happen is, when talk of minimum wage started kind of percolating, some franchisees of restaurant chains freaked out, because that's actually who it will hurt, right, the franchisee. And they said, well, I'm going to start raising my menu prices, and I'm going to start, telling the customer, and I'm going to make it its own line item, increase prices because of wages, and that all fell away. That was bad press, that was bad PR, that was a bad call. I think that they will find ways to pass it on to the consumer, but in a very stealth way. If that helps. So thank you for the time. I hope that was helpful. Jennifer, thank you so much.
Thank you very much, Sarah. Really appreciate that. Just one quick question. Are you seeing any of this capital go overseas? So are you seeing any of these private equity guys invest in overseas markets?
That's a great question. I actually don't even know. I was so focused on the U.S., Jennifer. You told me the U.S.
Next year.
But you know what? I'll take a look at that and see. I can't imagine not. But I know most of these guys I mentioned, they're very, U.S. focused. But I could see it transferring. Why not?
All right. Thanks. Thank you so much.